How to trade gold in the Asian session. Today in this YouTube video, I will teach you how to trade gold effectively using this strategy. There will be two parts of this particular strategy covering two setups. Now let's understand how to trade gold with setup 1, which is order block and fair value gap setup. Let's learn this strategy in 3 simple steps. Step 1. Marking the important kill zones. Mark the Asian session range in which we will execute the trade from 8 p.m. to 12 a.m. and the New York session zone to be marked from 11 a.m. to 8 p.m. The time zone will be UTC-4. Step 2. Move to the 15-minute chart. Look for the most recent order block that formed during the late New York session. Next, identify the fair value gap created after price moved away from that order block. Mark both the order block and the fair value gap on your chart. These zones represent areas where institutions may have left unfilled orders. Now let's move on to step 3, the entry. Once price retraces into the order block or fair value gap, look for your trade entry. Place your stop loss below the bullish order block or above the bearish order block. Then target a minimum risk-to-reward ratio of 1 to 2, meaning your potential reward should be at least twice your risk. Trades should only be taken after the Asian session opens at 8 p.m. Before entering, identify a valid order block and fair value gap formed during the New York session. If the order block or fair value gap has already been tapped before the Asian session begins, the setup is considered invalid and should be avoided. In that case, continue searching within the New York session range for a fresh, untapped order block and fair value gap. Only trade setups that remain untouched until the Asian session opens. Now, let's look at some real market examples of both valid and invalid trades based on this setup. As we review each chart, pay attention to the rules discussed earlier and notice what makes a setup valid or invalid. This will help you build confidence in identifying high-quality trading opportunities and avoiding unnecessary mistakes. Example number 1. This trade example is of June 3, 2026. Before the Asian session open at 8 p.m. we can clearly see an expansion creating a fair value gap and order block. This fair value gap is untouched before the Asian session. As the Asian session opens, price enters the fair value gap. This is where our entry is. We will aim for 1 to 2 risk-reward ratio and stop loss below this area. This is a trade example of a perfect setup. Example number 2. This trade example is of June 4, 2026. In this example, a valid order block and fair value gap were present within the New York session range. However, price never retraced into the zone during the Asian session. Since our entry conditions were not met, no trade was taken. Remember, if price does not reach the order block or fair value gap during the Asian session, we simply skip the day. Example number 3. This trade example is of June 2, 2026. This is an example of a valid setup where all the entry conditions were met. Price retraced into the order block and fair value gap during the Asian session, providing a valid trade entry according to our rules. However, not every valid setup results in a winning trade. In this case, the market moved against us and eventually hit our stop loss. This is a normal part of trading and highlights the importance of following a risk management plan. The goal is not to win every trade, but to consistently execute the setup over a large sample size. Interestingly, this loss could have been avoided by applying an additional layer of confirmation. We will cover that in part 2 of this setup, where liquidity is used as an extra filter to improve trade selection. Example number 4. This trade example is of May 24, 2026. As you can see, the price has opened on May 24 with a big gap up. When we zoom into the chart, we can clearly see these untouched order block and fair value gap. We will plan our entry from fair value gap, and this trade resulted in a 2R gain. Example number 5. This trade example is from May 21, 2026. As the Asian session opened at 8 p.m., a valid fair value gap and order block had already formed during the New York session. Price retraced into the fair value gap, providing a valid entry according to our setup rules. Using a 1 to 2 risk-to-reward ratio, the trade moved in our favor and reached the take-profit target with ease. Remember, no strategy wins every trade. That's why risk management is just as important as the setup itself. Focus on consistency, protect your capital, and let the probabilities play out. Also, be sure to watch part 2, where we'll add liquidity as an extra layer of confirmation. Thank you for watching this video.